Hello, everyone, and happy Financially Lit Tuesday. Another fun Tuesday. I come on every Tuesday at 6:30 p.m. bringing you news, tips, and tricks on how to wealth up. This is the final Financially Lit Tuesday of the month, and today I have a topic, or I'm going to be talking about payroll taxes today. For those of you that are business owners, have friends that are business owners, make sure that you are hitting the share button so that your friends and family can wealth up with us. Also, if you haven't done so already, make sure that you are subscribed to the YouTube channel Sipping Wealth, and that you are hitting that notification bell so that you don't miss out on any Financially Lit Tuesdays. Alrighty, so we do have several huge deadlines coming up in the month of October. So if you've been waiting to for a sign to pay attention, this is it, y'all. Like, no jokes, all jokes aside, make sure that you are paying attention right now to these deadlines coming up. So for those of you that filed a federal income tax extension, that's for my individuals, my sole proprietors, independent contractors, C corporations, your time's basically up. The extended filing deadline is the deadline for that is October 17th. So like I said, if you haven't done so already, you want to make sure that you file your taxes before that deadline. After that, you will have a failure to file penalty assessed with interest and all that good stuff. And you don't want all that. So your extended return is officially late after October 17th. Also, if you owe a tax bill, even if you file by that date, your payment is already technically late if you didn't make a payment in April. But you will have, like I said, that failure to file penalty, failure to pay penalty, interest charge as well. It gets hefty. So definitely make sure that you are making those, filing your return before that deadline. And it's literally a couple of weeks away, y'all. We don't have much time. So let's get it done. After that, we have our quarterly sales tax due, and that's October 19th. All right. So if you do month by month sales tax filings, then it's October 19th. And if you do quarterly sales tax filings, then it is due October 19th as well. So that means you have to pay and or remit those sales tax filings by that deadline. All right. For my employers, my business owners that have employees, these are W-2 employees or corporations with officers. You do have your quarterly payroll tax returns that are due as well. So if your payroll system is not automatically remitting these on your behalf, you want to make sure that these filings get remitted to your state, which is, in our case, if you're in Florida, the State Department of Revenue, Florida Department of Revenue, and also the IRS. So it does have to go to the state and federal. There are two filings. All right. Another thing is just to kind of go in depth as far as what what these employee taxes look like. So we have our reemployment tax. So this is a state filing. So for the state of Florida, for example, we have our RT6. So for our employers, like I said, this goes for your reemployment tax. And this is due by October 28th. So it has to be remitted by that time for your employees. Also, for my employers, for the federal return, you have your 941s. So this is for my employers that had employees within the last quarter that you were paying. So if you have payroll taxes that are less than $1,000, then all you have to do is a 944. But if you have anything above that, which generally most organizations do, then it's a 941. And like I said, you have until October 31st for that filing. All right. So that's 3 deadlines I done told y'all about. All right. Just to make sure that y'all are up to date. And if you have any questions as I'm speaking, this is live right now. So go ahead and drop a comment in the comment section. Hey Reggie, thank you for tuning in. Hello, hello. Um, so since employment taxes are half of this deadline update, I thought I'd make sure that tonight I go into detail about payroll taxes, because a lot of people get confused when it comes to payroll tax. What exactly does it mean? Even on the employee side, if you are an employee and you're like, why are these taxes coming out of my payroll, or what, um yeah, like, why do I have to pay taxes on these taxes? Why is this money coming out of my W-2? And for my employers, just giving you an idea of what this mean for you as well. All right. So this type of tax is really one of the most confusing taxes for my business owners, because it gets our bad business owners tripped up quite a bit of times. And also the fact that there's a state filing and a federal side as well. So, like I said, so if you decide to hire employees, this is not contractors. So, contractors, you are not taking out any taxes for them. You're not remitting taxes for them. You're just they're paying their own taxes at the end of the year. You're just telling the IRS how much money you paid them during the year, and they pay their own taxes on that. But you do want to make sure that you're 1099ing them, so that you do take that contractor, that deduction for hiring a contractor. Now, on the other end, if you, like I said, if you hired an employee, all right, if you hired an employee who you list out their scope of work, you told them, hey, you got to come in this amount of hours, you have to come in 8 to 5, do this task, then you first want to make sure that they fill out a W-4. Now, this is an employee withholding certificate. And on it, it allows the IRS and you as the employer to know how much in taxes are being withheld from their pay. And it also allows you to know how much taxes that you have to pay on behalf of that employee as well. All right. So it lets you know if they're filing a single head of household. Maybe they have 5 children, maybe they have one. So depending on how many deductions they're taking from their W-2, on their W-2, you would be able to determine that. So they take out the right amount of taxes on their pay. So federal and state income tax comes solely out of the employee's pay. And then you have Social Security and Medicare taxes. So your employee pays their share out of their pay. If you're a W-2 employee, then yes, you're used to this. So you pay that. And then as an employer, you match that amount as well. So you have to pay the magic number, 15.3%. And that's 6.2% in Social Security. And this is half of it. 6.2% in Social Security, 1.45 in Medicare. So in total, for the employer and the employee portion, it comes together and that it equals 15.3%. But as an employer, you're just responsible for half of that, and your employee pays the rest. Now, if you're self-employed, then you pay the whole thing. All right. So finally, you have federal and state unemployment or reemployment tax. So, and that is funded by the employer. So it ranges depending on the federal rate. So it can be 0.6% and it can go up to 6%. So, like I said, it ranges. It depends on the how much the employer pays, and state reemployment taxes, and it depends on the employer, how often your hiring, your retention rate, as far as your employees coming in and out, and then also how many of them are filing unemployment and your age with your company. So it does range, and also in the state that you're in. So for federal reporting on a quarterly basis, you are required to file a 941. Now, this is employer's quarterly federal tax return. Now, this tells the IRS, hey, we have these employees and we are paying, we have collected this amount and federal withholdings. We've collected this amount of Social Security and Medicare taxes, and we paid this employee this amount of money. So it's to give the IRS a scope of what's going on with the employees' pay and how much you're removing from their paycheck to give them an idea of it. If you're using a reputable payroll provider like ADP, Paychecks, or even QuickBooks, if you have a payroll provider, a lot of the times they do remit this on your behalf. So you want to ask your payroll provider, hey, are you going to be doing these filings on automatically? Is this something that I have to get in touch with you all quarterly? How is it going to work? But as a business owner, whether this gets filed or not, it's all you. It's your responsibility. So you do want to make sure that you're talking to your payroll provider and making sure that this gets filed. I have quite a bit of clients that I'm currently dealing with right now, having to do with payroll tax issues and concerns. So it could be a pain in the hoo-ha, y'all, because you are dealing with the state and federal side of things. But having a reputable, like I said, a payroll provider can help alleviate this, and also making sure that you ask the right questions, y'all. All right. So annual for employers in January, there's another filing. You do have a 940. So this 940 is employer's annual federal unemployment tax return. So this, once again, is a federal return that allows the IRS to see what happened throughout the entire year as far as the pay and unemployment tax collections from for the employee. So this is an annual report. Like, it gets filed once. Your 940 gets filed quarterly. Your 941 gets filed quarterly, and then your 940 gets filed annually. But like I said, I recommend getting a payroll software that's going to automatically do this for you, because it helps alleviate all that stress. Thank you, Reggie. Good stuff. Good stuff. I appreciate it. Great information. Thank you. Oh, hey, Naomi. Hey, girl. Hey, girl. Hey. I'm here listening for valuable information. Thank you. Thank you for tuning in. I appreciate you all. And like I said, if y'all have any questions or things like that, be sure to drop a comment in the comment section. Thank you, y'all. All right. So for our state reporting, we have our RT for the state of Florida. I'm gonna talk generally for the state of Florida because a lot of you tuning in are from the state of Florida. So we have, but generally every state is going to have some kind of quarterly reemployment tax return. For Florida, we have an RT6, and it stands for reemployment tax. And that is the filing that is done, like I said, quarterly, to let the state know how much that you're supposed to be paying for that employee. And right now, for the state of Florida, the rate is 2.7%. So it, yes, as an employer, you got you do have your taxes, your share of taxes that you have to account for. But we can't roll this boat alone because it's a huge ship. So we got to make sure we have a crew to do so. So having employees is necessary, but it also comes with making sure that these filings are done as well. For my corporations, so I touched on it a little bit before. If you created an S Corp or a C Corp, even if you have no employees, or you as the owner are an employee of the business, okay? So, and you are an employer. So you're an employer because you have an employee yourself, at least. If there's no other employees, you are an employee because you are no longer self-employed. You are employed by the business. So you do want to make sure that you are doing filings based on you being the employee in the business. If your business isn't earning any money and you're like, I can't even pay myself, my business isn't earning any money, then you are responsible for still filing 0 filings for your 941s, your 990s, and your RT6s, so that you can avoid penalties, because y'all, they will keep those penalties coming in. All right. Hey, Eni. Hey. Question: do you pay the taxes twice, the corporate side and the income side? So those are two separate taxes. Funny, right? So you do have income tax. So you have your general income tax, but you also have your payroll taxes, which consist of your Medicare, Social Security, unemployment or reemployment taxes as well. So, and that those are just a few of the taxes. But yes, you do have your different taxes. Even as a corporation, you are taxed on your dividends that you're paying out, and then your income that you are bringing into the business. So there are quite a bit of taxes coming into play here, but it's not that you're paying it twice. You're technically paying it once, but it's that there are multiple tax elements in the equation. And then as an employee of your corporation, if that's what you're referring to, then you are essentially W-2ing yourself. As the corporation, you get to write off your expenses. Your payroll expense is an expense. But on the other side, you when you file your taxes as a W-2 person, you already had paid your payroll taxes. So you're just remitting your normal W-2 payroll taxes as an employee. Because on the other side, the corporation is writing it off as an expense. Hopefully that helps. What does that look like for an LLC owner? So for an LLC owner, if it's a single member LLC, then that means you are self-employed. And the other thing is, as a single member LLC, you're also you're just taxed as a sole proprietor. Okay, meaning you're taxed just like you would be taxed on regular ordinary income. As an LLC sole member, and taxed as a sole proprietor, you are self-employed, like I said, which means you have to pay the employee and the employer portion of your taxes. So your employee, your payroll taxes is 15.3%, because you have both sides of the equation. On top of that, you have an income tax. So you have the income tax, and then you have your payroll tax. So depending on what tax bracket you fall under, as an LLC owner, you have that income tax. If it's 10%, let's say it's 10%. You made $10,000. Your income tax is 10%. Now your tax bill is $1,000. But let's also say that 15.3% in payroll taxes. Now 15.3% of the 10,000 is in addition to the $1,000 that you paid. So now in total, you have a tax bill of, let's say, $2,500. And that includes your income tax and your self-employment tax. Okay, one more. What of those with income producing real estate? What of those with income producing real estate? Okay, so as a real estate, if the property is under the owner, then it goes on a Schedule E. So it counts as additional supplemental income, meaning it's not business income, but it's additional income that the individual has. So it will go on a Schedule E. So it will just be taxed as income tax. But say you have a real estate business, then it goes on a Schedule C. Now, because you have a real estate business, you are self-employed within that business, and you have income tax and you have self-employment tax. So that's the difference with that. So some people may have a property that they own personally and they rent out that property on a personal level. But if all you're doing is real estate, all you do is rent out properties, then your primary job and profession is real estate. So you can't put it on the Schedule E, but you still, but you'll put it on the Schedule C and put the income on there as being employed by the business. Hopefully that answers your question. Can you explain a little bit about the 179 for vehicles? So Section 179 gets used so much. It's a pretty good tax code because it allows for vehicles specifically, vehicles over 6,000 pounds to be 100% deductible with that the first year it's bought, the year it's bought. So for companies, maybe like dump truck companies, maybe they purchase a dump truck and it costs them 150K, let's say. So because that dump truck is over 6,000 pounds, they're able to write off the entire depreciation of that vehicle in the first year they purchase it. So if they purchased it on November 30th, then they could write off the depreciation, like I said, for the entire vehicle. They could write off the entire $150,000 price of the vehicle in that first year that they purchased it. And so that's usually why people use the 179, section 179 for vehicles. Now, you also do have within the section 179, you can still take a larger deduction for other size vehicles, but the 6,000 pound vehicles allows you to take the entire write off the entire amount of the vehicle. But you still can do a section 179 deduction for a vehicle that's less. You just can't write off the entire amount of the vehicle. So hopefully that helps. Alrighty, y'all. So as far as payroll taxes, I think I pretty much hit all the areas with that. I do want to make sure that you all are aware of what payroll taxes are, what deadlines are coming up for in the month of October, because like I said, we have four tax deadlines that next month. So we definitely want to make sure that we're hitting those deadlines. If you filed an extension, make sure that you file your taxes, get in touch with whoever you need to get in touch with, get your receipts. The IRS is like getting ready heavy with audits. So for my business owners, make sure that you're organized, get your bookkeeping records in order, because there will be a surplus as far as the amount of audits that are being done, especially those that receive the PPP loan. So they are definitely going out there. So, but yes, y'all stay safe out there. For those of you in Florida with this hurricane coming through, no hurricane parties. Jacksonville's no fun. You know, we can't really do a hurricane party here. Like you can't get over the bridge. but but I kid. But y'all stay safe out here. Make sure that you get your supplies. It is supposed to be coming in to the to Jacksonville for those of you tuning in from Jacksonville. But stay safe and have an awesome, amazing Financially Lit Tuesday, y'all. Thank you for tuning in, and I'll see y'all again next month. Alrighty, y'all.